Here we are with some more turbulence for Bitcoin. We ended up getting rejected off that $28,000 level. We did not clear the resistance, right? Things were actually looking pretty good for Bitcoin, but the fact still remained. Bitcoin was still battling that resistance, and we've actually gone ahead and done something really good here. There's been a lot of weird mixed signals in this market lately, ladies and gents, but I'll tell you what, I am really happy to see how Bitcoin kind of got rejected exactly where we were expecting and is now finding support exactly where we were expecting. I want to talk to you about the possibilities of Bitcoin traveling up further in the $30,000 range, or if we're going to have to revisit the 20s, even lower, down towards 25k. But here's the thing, right, is that we had this deviation here, we had another deviation here forming a double bottom, and now we're just kind of finding support at this line, which, like for the most part, we haven't actually fallen below this line for 2.5 months. So it has been quite a historically important level, in this market over the last few months here. And we are still holding our area of support. So, typically what you would expect with this kind of situation is, we've recovered, we found resistance, and now we're just kind of confirming support. As long as support does stay confirmed, I have no reason to expect that we can't get back up to this high. And that's looking pretty good to me, right? I mean, the fact that we got this rejection come in exactly where we would expect is good. It shows us that we're not doing something stupid. We're not doing something crazy that's unsustainable. We are pulling back and we are falling down to important levels. And at the very same time, because we're forming price action like this, the other side is that we are reducing the resistance that we're facing in this market. If you look at the 4-hour 𝗬𝗢𝗥𝗙𝗚𝗓, yes, we do have resistance right now, and we are in that resistance right now. But this resistance kind of completely closes up tomorrow, and it actually becomes support, right? So that's actually a really, really good situation for Bitcoin. At the same time, if we look at other things like the daily EMA ribbon, which previously was quite problematic for Bitcoin, now it's just kind of being ignored. We're not actually doing anything with it. So where previously, we were basically finding quite a lot of resistance here, now the market doesn't really care about it, right? So something that previously was offering resistance, meaning the Ichimoku cloud, isn't offering resistance anymore, and something like the daily EMA ribbon, which was also offering resistance, just isn't even relevant anymore, right? And so what's happening is that bit by bit, what we're actually doing in this market is stripping away reasons to be bearish, and that is really exciting, guys. That's actually a pretty big deal in my opinion, and it does spell some really, really nice trading opportunities here. Longs off here, for example, pretty decent risk to reward, especially with stop losses below these wicks. I mean, it's a good, textbook trade as far as I'm concerned. It's not good enough for me to take, but, there are definitely going to be some really nice opportunities continuing to open up in this market, as they already have for quite some time now, because of the healthy price action that we're seeing. Now, I do want to highlight to you that if you're interested in trading this price action on the same platforms I'm using, they're all linked down below in the description. BingX does not require KYC, and you can trade traditional finance. You can trade the S&P 500, gold, oil, stocks like Tesla, Apple, Amazon, all with leverage, which is really fucking cool. You don't have to take a picture of yourself or your ID, so really good for people that are more privacy minded. And Bybit is going to give you up to $30,000 to trade with in the market. So that is free money that you can deploy into the market. Any profits that you generate are yours to keep, and you're going to get this as soon as you start trading on Bybit. Literally make your deposit, start trading, and that is it. You'll get the money credited into your account. And by the way, giveaway winners have been selected, but I will not be sharing the user IDs because that's just bad for your privacy, so I don't want to fuck people over. But the winners will be reached out to by Bybit directly. So congratulations to you. There are 2 winners, because like I said, Bybit is doing one, and I'm throwing in a bonus iPhone myself. Definitely sign up to what is, in my opinion, the best platform out there if you are interested. But let's move it back to the chart here and talk about our support area. We don't have other indicators supporting us in this range right here, but we do have the sideways support, and to be honest, for me, that is good enough. What I'm curious about is if we refresh the forecast dashboard, what are we looking at? Are we looking at a situation where things are getting worse or better? Fear and greed index more or less in the same place. Long and short ratio, look at that, guys. 2.28 longs for every short for Binance retail traders. So we are still extremely dangerously heavily skewed into the bearish direction right now, just from what I'm seeing. This is This is a really big deal, guys, that we are seeing, you know, just too many longs continuing to pile on for retail traders. This is kind of the only thing that weakens Bitcoin's position, in my opinion, right? I mean, you just can't see Bitcoin shooting up while all of the fucking retail dumb cunts are trading that direction too, right? Because they're typically going to be wrong. I do have some really good news for you, though. The dollar has started to pull back. If we take a look at the dollar right here, we got pretty close to my area of resistance, which is absolutely beautiful. Obviously, we do not need to hit resistance levels precisely, and we can get within the range, and that's still good enough. So this red line was a key level that I was watching, and we got very, very close. The red line was at 104.9, and we hit 104.7. So I got super, super close there. Dollar is pulling back, and the result of that is gold has seen a bit of a pump up. Let's take a look at gold, and the S&P 500 has reclaimed its highs as well. The S&P 500 is still very much trending upwards, going in exactly the direction that I was warning you guys I'm expecting it to take. So again, this is one of the markets that's very, very easily tradable on BingX. Also Prime XBT, by the way, they also allow you to trade indices and stocks and so on. No, not stocks, I think just indices. So they are well worth checking out as well. $7,000 in bonuses, right? It's just a good offer. No KYC there either. Not mandatory. You know, and so what we have here is a beautiful situation where, yeah, the dollar has been pulling back, traditional finance is seeing some sunshine, and in that sense, yeah, it is a bit of a shame that Bitcoin hasn't actually seen some gains. This is actually kind of more of the same narrative we've been seeing lately, where, you know, good things are happening in the market, but Bitcoin isn't actually really responding to it, and that is quite problematic. You know, what we want to see is that good things happen in the market, and Bitcoin, you know, is happy about that. But right now, it's not really doing anything with it, which is a little bit concerning. I don't want to read too much into it, though. It's just not something that I think, you know, what we're not looking for is like a day-by-day correlation, right? This is really important. What I'm not looking for is to say, like, on this day the dollar dropped, so on this day Bitcoin will rise. Typically, to be fair, that is exactly what happens. And, you know, a lot of people deny this. I do not understand why. The data is very clear. Typically, that is what happens. But we don't need that to happen 100% of the time. What we're more interested in is just the overall relationship between the two markets. And if that relationship is still there overall, we're still good. And trust me, it is definitely still there. So, you know, it is something that, you know, I'm not too concerned about, because, you know, what I'm more interested in is on a week-by-week, month-by-month basis, does Bitcoin respond to the dollar the way it should? And the answer from what I'm seeing is still unequivocally yes. So I just can't be too worried. Now, here's something else that I'm not too worried about, is the resistance that we're facing. Now, we had very, very heavy resistance that we were, you know, struggling with for quite some time. If we, you know, kind of move from, like, when we fell down into this range to now, it's been 3 weeks. And in that time, let's take a look at how many attempts we've had at our resistance. That's 3 and 4 right there, attempts across 3 weeks. So basically a little bit more than 1 attempt per week, each of them failing. But we are continuously testing resistance levels here. We broke the resistance here, and that's how we got a little bit higher. And now, if we are able to get a little bit higher still, this still means that overall we are just, you know, I mean, we're basically in a sense, I mean, if we keep kind of holding this formation, we're going to be in a bit of a, you know, higher lows and higher highs formation here. So, you know, these resistance levels are really getting tested. They're really being put through their paces right now, guys. And if they hold up, then fair enough. But, you know, as we know quite well, in a bullish market where we just kind of keep on targeting highs, and where, you know, we just keep on, you know, hitting resistance, eventually these resistance levels do break a lot of the time, purely because they just, you know, they can't stand forever, right? They can't stand forever. And given that, you know, we've already been testing them quite a few times over these last few weeks, I think it is, you know, strengthening Bitcoin's position a little bit. It looks like the market doesn't want to take it back below 26, because back below 27, I should say, because if we were going to go, you know, back down to these lows and even lower, I kind of think we would have done that already. You know, we had a really good chance to do that here. We had another really good chance to do that here. You know, one of the things that I talk about as an analyst, and that I share with VIPs and so on, is that, you know, when you find yourself in a position where the bears have been given a lot of opportunities to do something in the market, and at every opportunity they fuck it up and they don't actually take advantage of it, then at some point you just got to say that, you know, maybe the bulls have a little bit more power in the market, and that's why the price isn't dropping. And, you know, that is definitely a possibility that's worth considering. Now, something that I do want you to keep in mind as we continue to go forward in this market is the VPVR resistance. If we zoom out onto the 4-hour time frame and take a look at what this is showing us, this is quite a sobering perspective here. I have no idea why the reception is this horrible today. But yeah, it is quite important to keep this in mind, because I think that we are kind of, also just because we've kind of gotten used to this range, we're going to lose perspective of what is still ahead. The fact that Bitcoin has traded sideways in these ranges for so long does mean that there are some big levels that are very important with the VPVR. And if we wait for that to load up, you can see that now really nicely right here on this chart. We've got some big spikes coming up here, that are just going to be problems for Bitcoin, right? So the next big spike for Bitcoin that I'm concerned about is going to be right here at 28K, which is the same level that, we consolidated at for so long before and where we found resistance just now. But above that, we've got a little bit more at 29.3. I'm not worried about this, to be honest. I think if Bitcoin can clear this block of resistance between these two yellow lines, then it shouldn't be too hard to get up to this yellow line. And, if we get up there, we're probably setting new highs. So I am not too worried about it, but we are at the bottom of a very big block of resistance on the VPVR. So, at the same time, it's not like this market is rid of bearish factors. It's not like this market has no bearish things going for it right now. There are still a good number of bearish indications on this market, and that's why we're still stuck in an equilibrium, right? If it were obvious, then the price would be moving up quickly in the upward direction or quickly in the downward direction. But it's not obvious right now, and that's why we're stuck in an equilibrium, right? So we do need to see this get resolved. And you know what? I'm still overall kind of leaning towards the bullish side. I have gone back and forth a little bit in this range, and I have traded both directions without much success. I traded multiple short positions now. I've taken 2 short positions, in this market, and I took my first one like around here, I think. I can't remember. And I closed it at break even. I took another short position up here, and I closed it at break even because I'm a fucking idiot. I would have been in a really good profit right now, actually. I'm just curious what that would be. I think it was 10x. So I'd be in a 32% profit. It's not crazy, but 30% is good enough. And by the way, it's such a small range, right? Like the price doesn't actually have to move much, but I used 10x leverage, right? I'm pretty sure I have to check the numbers because I forgot now. But this kind of thing is definitely a little bit bitter for me, obviously, because I would have made some money on that short position. And instead I suffered a really small loss on one of the platforms I traded on. I actually told you guys that I traded that short position on Bybit and OKX. And on OKX, I actually didn't suffer any losses. But on Bybit, I suffered a really small loss because half of my position was stopped out. Actually, a quarter of my position was stopped out. So it was really, really controlled. But even at the numbers I'm trading at, a quarter of my position being stopped out, and even that, at that it was like a 10-15% loss. It wasn't big. It still is something, right? And that's really important to keep in mind, as if you're trading with, larger sums of money, what I did here and what I preach doing all the time, and I do what I preach myself, is trading the same thing on multiple different platforms, just because you can you can spread out your risk, right? One exchange will have a liquidity issue, one won't. One exchange will have downtime, one won't. It just gives you a little bit more flexibility. It's good for you. It's more advantageous for you. And what better way to do that than also collecting over $70,000 in sign-up bonuses. OKX will give you up to 30K, just super easily, depending on to be honest, it is down to luck. But if you've deposited $50 or more, you're instantly entitled to nearly to up to $20,000 in bonuses. And that just happens with mystery boxes, right? So it's really well worth checking out with all these bonuses, and just for the added security. I mean, it served me really well. And the thing about this kind of thing is that it's not useful all the time, right? Like, it's only gonna be useful once a year, or like once every 3-4 months in this particular case. There's many other reasons that it's useful to have other exchanges, but the specific instance I'm talking about now, it doesn't happen often, but when it happens, it saves you money. And it's a no-brainer. If it saves you money, then you would do it in your real life. If something would save you $2,000, you would take it pretty seriously. But in trading, we treat it like play money, and we don't respect it. And that's where a lot of problems come in for traders. And if you do jump inside of the 𝗬𝗢𝗥𝗙𝗚 VIP group and the 𝗬𝗢𝗥𝗙𝗚 Academy course, one of the first things that you're going to hear me talking about is you've got to fucking respect your money. Most people, they just don't really respect their money. They're not really paying full attention to what they're doing. They just kind of, like, they're seeing people get rich off Twitter. They're seeing dumb cunts buy meme coins and pull a 5 million X and become an overnight millionaire, and it's just very sexy, very attractive, and so people they think that they're gonna have the same success. And And you won't. You know, I mean, I'm quite happy to tell you that, because I'm going to stop you from wasting your own time. You're not going to pull that success off. If you will, then you're probably not watching this YouTube channel, you know, because you're probably watching some other shitcoin channel, and you're holding your fucking balls, praying that you've made the right prediction when you've bought a coin 6 months ago and now you're down 90%. But if you're a little bit smarter than that, then you're not going to strike gold like that, because instead of just kind of fucking, yeah, just sitting there on your hands waiting for something to happen, you're actually going to go out there and try and make something. You're going to actually go out there and try and make some money. You're actually going to, you know, try and actively trade and influence the likelihood of your success. That's what we're doing as traders, right? We're actually going out in the field, getting our hands dirty, making some money, and coming back home. You know, but these altcoin traders, they'll just kind of throw a shot and wait, and then most of the time nothing happens. So 3 years pass, and you're poorer than, you know, the guy that was just more sensible, the guy that was just a little bit slower than you, who wasn't blinded by dollar signs, who just kind of maintained a healthy perspective and did the fucking work and learned how to trade and learned how to exercise good risk management, and he will make more money than you 100% of the time. You know, it's just always how it goes, because those people that, you know, trade altcoins and so on, unless you've got insider information or you're a YouTuber, so you just, like, you know, YouTubers get the fucking red carpet rolled out for them every day. Like, unless you've got these unfair advantages, you're just not, you know, you're just not going to make that kind of money. It just doesn't happen, right? But where it does happen for normal people is when you take a little bit more, you know, kind of conscious charge of what you're doing, so that you can influence your results, right? And that is that, you know, you can influence your results here a lot more than you can, you know, if you just kind of buy and hold something that you don't even care about. So really important thing there. That's why I thought I had to throw that in right there for this YouTube video. I do want to take a look at the monthly time frame. We have now closed our monthly candle, so that is pretty interesting. I do not have the up-to-date information on this, because the BLX chart takes 1 day to update, which is kind of annoying, to be honest with you. But I think we can actually just go ahead and remove all of these lines and take a look at what the monthly time frame looks like here. So we are just looking at this candle, and, you know, the only thing that's kind of concerning about this candle is the fact that it's a bearish engulfing candle. This one candle here eclipses completely the body of the previous candle, so this is an engulfing candle. And, you know, like the last time we had an engulfing candle to the downside was right here, and it did result in a really big drop and then a further drop the next month. So is that something we're looking at now? I don't really know. The thing is that these are coming in at different times, right? I mean, we formed this bearish engulfing at a market bottom. We formed it after, you know, many months and many percentage drops, you know, many months of downtrends and big percentage drops, and now it is just slightly different. There have been a good number of bearish engulfing candles that have been quite disastrous for the market. Here's another one right here. This one engulfing candle actually engulfed the previous 2 candles, right? It engulfed these 2 blue candles in 1 month of price action, and then the next 2 months were just an absolute disaster, and so were the next kind of 5-6 months after that. You know, so bearish engulfing candles can be quite problematic for the market, but they're not the be-all end-all. Here's another bearish engulfing candle, and this one actually looks really similar to what we're in right now. You know, and this one actually worked out pretty nicely for Bitcoin. You know, it basically just served as a pullback here. You know, after a couple months of trending up, it served as a pullback before absolutely just going crazy. And, you know, that is actually very similar to what we're in right now. So, you know, and it came off a market low. I mean, we set a market low over here, and then we formed the engulfing candle. We set a market low over here, and we formed an engulfing candle. You know what I mean? I mean, there's a, you know, there are similarities with bearish instances in history and similarities with bullish instances in history. But what's very clear to me is that this isn't as concerning as some of the other engulfing candles we've formed in the past, and that is really reassuring. You know, it's nice to know that we don't have to do anything too dramatic with this. And, you know, the other thing to keep in mind is the monthly time frame is still, in my opinion, just too large of a time frame for Bitcoin, just not particularly useful. You know, and because of that, I do take it with a big pinch of salt. But, you know, I mean, I think bottom line, what is very clear is that we have trended up for, you know, quite a good amount of time here. You know, from our high to our low, it was a solid 4 months of trending up here. You know, and we've now pulled back a little bit, right? Which is exactly what you want to do within an uptrend. So I'm still pretty happy with what I'm seeing here. If we look at this on the weekly time frame, it just looks like more of the same picture. You know, we're trending up, we're correcting, we're trending up, we're correcting, we're trending up, we're correcting. It's just the natural, these are the natural ebbs and flows of the market, you know, and a lot of people do get shaken out in ranges like this. They do lose perspective, but You know, I mean, bottom line, guys, what I'm seeing here is a very, very clear, big, you know, second leg within our current uptrend, right? This was the second leg. This was the first leg. Very, very clear second leg, you know, which kind of bleeds directly into a falling wedge pattern, you know, which is just inherently so fucking bullish that oh, and by the way, we have tagged the uptrend. We have tagged the resistance line here. As of a few days ago. I do not know how I didn't notice that. That is really weird. I would usually notice things like that, but there you go. I've spotted that live with you guys. You know, and so this is you know, a super classic bullish pattern. I mean, you know, we trended up, and now and now we're just kind of like slowly correcting down before. I mean, this is how it happens every time. I mean, it doesn't have to happen this time, and it could be the end, but I mean, I don't know, guys. It's just not looking that bearish to me overall. Like even if we fall down to 25, my perspective has been this way for a while. That yeah, we do come back up. And again, I think that a lot of this is just going to depend on traditional finance. But when traditional finance is doing so well, you know, to me, it's just hard to find reasons to be bearish about this market. I mean, I totally understand why we have to be cautious because it's a crazy time in the economy and the dollar and whatever and the interest rates and you fucking name it. It doesn't matter, you know. Obviously, I get it. Like, it's a weird time, but I'm just looking at the charts, and you know, just looking at the charts has served me incredibly well so far. That's how I entered the, you know, I wouldn't have entered a fucking long position if I was too scared about, you know, the other things that most people who think too much are scared about. This, by the way, this is the thing, right? Is like, you've seen the bell curve, right? The bell curve chart. Let's pull this up real quick. Bell curve for IQ. And this is the thing that's really, really interesting, right? Is that the people that are like on this side of it here, these are the guys that buy meme coins and NFTs and, you know, all the other stuff. And I am very directly calling you out if you're one of these idiots, because that's fucking ridiculous, mate. That you should be ashamed of yourself if you fell for that hype. But anyway, here we are. You know, and that's where these people are. And then, you know, probably you, the guy that thinks too much, the guy that, you know, kind of overthinks and like, what about the interest rates and what about the Fed announcement and, you know, like, what else is coming up? There's PMI data, CPI data, there's fucking, you name the acronym, you know, there's all sorts of shit going on, and you'll just continuously look for reasons to be scared, and you know, like a guy like me, I'm trying to be over here. Like, I don't want the highest IQ. I'm okay with that, right? I just want to make some money in the market, and you know, and if that means that I have a lower IQ than you and I consider less things than you, but I make way more money than you, then I'm okay with that, bro. You know, like, you can keep your fancy IQ numbers. I'll keep the $200,000. That's my perspective here. Absolutely fucking savage, as you know, because that's what you get on this YouTube channel. Do me a favor and smash up the likes if you do appreciate that. This is really important. And what we're not talking about IQ. I want to make this super clear, right? I mean, I'm only showing you the IQ bell curve because it's an easy image to show you. But what we're not interested in is IQ. Instead, what we want to call this is just the overthinking factor. Like, how much do you think? How much do you know, how much do you doubt yourself? How much do you second guess yourself, you know? And the people that do very little of it with no fucking self-awareness, these are the NFT idiots. And the people that are up here, these are a lot of you guys that are watching this YouTube channel that, you know, you just need to pull yourself back a little bit, bring yourself back to basics. This is how you fix it, because I've been there too. This is how you fix it. You bring yourself back to basics a little bit, you know, ground yourself in there. You know, keep in mind that if you just kind of apply these rules historically, they would have worked. And if you do it in the future, well, this is all we're doing as traders, right? We're just kind of using historical data to see what might happen in the future. A lot of people take big issue with this, but it's actually a pretty good practice. And for people that do it well, it works really, really well. So it's not something that, you know, is some mystical thing that you can never get right. You know, a lot of people are doing it well. You just have to, you just have to be grounded with the right principles. You have to learn things the right way, so on, so forth. That is exactly what we're bringing forward with you guys in the VIP group, and of course with phone calls as well, coming for free with yearly members. We're doing uncapped calls there, guys. It's just as much as you like. If you're in the yearly group, you just hit me up and tell me you want to call, and we will organize that. And actually, on that note, I think I'm actually going to be having a call with a VIP member right now after this video, so I do have to get going. But if you have enjoyed this video, do me a favor and smash up the likes. If you have enjoyed this one, double check that you are subscribed. You can hit the bell icon and all that good stuff. I will be on the altcoin channel right after this video as well. So if you want to see some altcoin analysis, come find me there. And if you want to trade on the same platforms I'm using, then you can follow these steps on screen right here. As for the markets, pretty damn bullish to me. I can't find reasons to be bearish. Every chart in traditional finance is looking good to me right now. The dollar has even rallied up, so the dollar is definitely ready to suffer that gravity drop if it does continue its downtrend, and it is still very much in the downtrend, so that could definitely happen. And you know, all of that, yeah, I mean, Bitcoin's not doing amazingly in light of all of that for sure, but we are still at $27,000, and we haven't, you know, we haven't broken out of this range. So still, nothing has changed, right? I mean, this was a deviation, so we're still in the same game that we were in before. Nothing has changed, and with traditional finance looking so bullish, and knowing that Bitcoin is probably gonna, you know, follow in its footsteps. And also, by the way, the debt ceiling thing, like, that actually happened like yesterday, if I'm not mistaken, right? So you know, like, that can has been kicked down the road by, you know, basically a year and a half now as well. You know, I mean, it's a good, you know, I mean, a lot of the things that were bearish, a lot of the things that were problematic for Bitcoin aren't there anymore. You know, and meanwhile, things that generally are good signs for crypto are firing off, you know. So I mean, we can definitely be you know, kind of concerned about what we're seeing, and worry about, you know, the price dropping down to $21,000, and worry about picking it up at cheaper prices. But you know, at the same time, guys, for me, it's just hard to find reasons to be too bearish about this space. So you know, and I'm just telling you what I'm seeing. But there you go. I really hope you have enjoyed it. You know exactly what to do. I'll see you all in the very next YouTube video, also on the altcoin channel. I do need to go for that VIP call now, but if you are interested, you can also get yourself inside by following these steps right here. It has been definitely our most successful package, and just the coolest one, right? I mean, it's really cool to be able to jump on the phone and stuff like that. So I know it's going to appeal to a bunch of you. But anyway, I hope you have enjoyed this one, and I'll see you all in the next one. Cheers.